Greetings, financial enthusiasts. Welcome back to the Elite Economizer, your compass in the ever-evolving world of personal finance. If you're new to our community, don't forget to hit that subscribe button and become part of the growing tribe. Today, we're unraveling the intricacies of the new $600 IRS rule, a game changer that's set to impact the lives of up to 40 million Americans in 2023. Yes, you heard it right, and we've got your back with all the insights you need. Let's start by peeling back the layers of this financial onion. The IRS has implemented a $600 rule that's sending shockwaves across the nation. Up to 40 million Americans are poised to be affected, and the catch: most folks are blissfully unaware. Tax documents are scheduled to be dispatched in January, merely 3 months from now. Brace yourselves, this might catch you off guard. Now let's dig into the nitty-gritty. If you've been utilizing platforms like PayPal, Cash App, or Venmo, this concerns you. Any transaction surpassing $600 through these third-party payment processors will trigger the IRS's attention. Say hello to the 1099-K, a tax document that will soon become a familiar face. In the not-so-distant past, the threshold for IRS intervention stood tall at $20,000. Fast forward to the present, and that figure has taken a nosedive to $600. This change is monumental, and to put it into perspective, let's consider a hypothetical scenario. Imagine you hosted a garage sale and sold furniture totaling $600. Previously, you'd fly under the IRS radar, but with the new threshold, you're in for a tax document surprise. Now, what does this mean for you? If you've engaged in transactions, whether selling goods or providing services, amounting to $600 or more, congratulations, you're now on the IRS's watch list. Here's the twist. Even if you operated at a loss, lacking proper documentation could lead you to owe taxes on that $600. The burden of proof is squarely on your shoulders. If you're finding value in these insights, hit that subscribe button and stay informed with the Elite Economizer. Now, let's delve deeper into the potential challenges you might encounter in this financial maze. Brace yourselves. Innocent Americans are bound to get caught in the crossfire. Let's take a practical example. You sold some old clothes for a total of $600. You might think, no worries, I made a loss. But the IRS won't take your word for it. They'll want receipts. And not everyone has receipts for clothes they bought years ago. Get ready for a potential IRS audit. Even if you're lucky enough to have a sympathetic agent, the emotional toll and time investment can be draining. The system operates on a guilty until proven innocent basis, and you'll find yourself entangled in a bureaucratic web. But the fun doesn't stop there. Your tax preparation fees will soar. Platforms like TurboTax or accountants will charge extra due to the added complexities of the 1099-K. It's an unintended consequence that will pinch your pocket just for being part of the $600 club. Let's address the elephant in the room. Is this change efficient? Some argue it's a waste of IRS resources, chasing down $600 transactions when more pressing matters loom. The threshold increases from $600 to $10,000 are on the table, but given the current political climate, it seems like a distant possibility. Enough doom and gloom. Let's explore some practical tips. One way to sidestep the 1099-K is to opt for alternative payment methods. Platforms like Zelle, which doesn't fall under the third-party payment processor definition, can be a breath of fresh air for those looking to avoid unnecessary tax scrutiny. Here's a heads up. This rule was originally slated for 2022 but got delayed to 2023. Don't hold your breath for another delay. The IRS seems adamant about its implementation. While politicians debate, the $600 threshold remains the reality for now. Now, let's zoom out and explore the broader implications of this $600 rule. Beyond the potential audit risks and increased tax preparation fees, there's a deeper concern. Critics argue that the IRS is allocating significant resources to chase down what some consider minor transactions. Consider this scenario: a teenager selling items on a platform like Venmo or Cash App. With the $600 threshold, even these seemingly insignificant transactions can now trigger IRS involvement. The original intent behind this rule was to catch tax cheats, but is the cost-benefit ratio justified? The controversy surrounding this rule extends beyond its potential impact on individuals. Some argue that the $600 threshold is too low, while others support it, citing the need for everyone to contribute their fair share. It's a divisive issue that has sparked debates across various forums and communities. As the financial world grapples with the implementation of this rule, there are discussions about potential changes. Some politicians are pushing for an increase in the threshold from $600 to $10,000. While this might ease the burden on small transactions, the future of this proposal remains uncertain. In light of these changes, how can individuals prepare themselves? First and foremost, stay informed. Educate yourself about the specific rules and regulations surrounding transactions, especially if you engage in small-scale buying and selling activities. Dig deeper into the tax implications of your financial activities. If you're a freelancer, gig worker, or someone with a side hustle, understanding how this $600 rule affects you is crucial. Consult with tax professionals to ensure you're on solid ground when it comes to compliance. Leverage technology to streamline your financial record keeping. Digital platforms and apps can assist in maintaining organized records of your transactions. This not only simplifies your life but also ensures you have the necessary documentation should the IRS come knocking. Consider getting involved in advocacy efforts. Join communities and forums where discussions about these financial changes are happening. Advocacy can play a crucial role in shaping policy, and your voice matters in the ongoing conversation about the $600 rule. Invest time in financial education. Understanding the nuances of tax regulations, especially those affecting small transactions, can empower you to make informed decisions. Attend workshops and webinars, or seek out educational content to stay ahead of the curve. Now that we've covered the ins and outs of the $600 rule, let's discuss strategies for financial resilience. Building an emergency fund, diversifying income streams, and staying informed about changing financial landscapes are essential components of financial resilience. When in doubt, seek professional advice. Accountants and financial advisors can provide personalized guidance based on your unique circumstances. While online resources are valuable, a one-on-one consultation ensures that your financial strategy aligns with your goals. Let's explore the ripple effect on digital transactions. With the $600 threshold, even minor digital transactions can now become part of your financial dossier. From splitting bills to chipping in for a gift, these seemingly innocuous transactions might now bear unexpected consequences. As we navigate these new financial waters, it's crucial to address the delicate balance between privacy and compliance. The $600 IRS rule brings forth questions about how much financial data should be in the hands of tax authorities. Join the conversation. Where do you draw the line between financial privacy and regulatory compliance? Let's take a global perspective. How do other countries handle similar financial regulations? Are there lessons to be learned from their experiences? Exploring international approaches can provide insights into the effectiveness and challenges of implementing such rules. With the evolving landscape of financial technology, how are innovative solutions shaping the future? Are there technological advancements that can streamline the reporting process for both individuals and financial institutions? Stay tuned as we delve into the intersection of fintech and regulatory compliance. As we approach tax season 2023, it's time to strategize. What steps can you take to prepare for the changes brought about by the $600 IRS rule? From organizing your financial records to exploring tax-efficient strategies, we'll provide a roadmap to ensure a smooth sailing through the upcoming tax season. Phew! That's a comprehensive look at the $600 IRS rule. Knowledge is power, and we've equipped you with the tools to navigate this financial terrain. Before we wrap up, share your thoughts in the comments. Have you been caught in the crossfire of the $600 rule? I'm curious to hear your experiences. Hit that like button if you found this information valuable. And of course, subscribe for more financial wisdom from the Elite Economizer. Until next time, take care and stay financially savvy.